Before I share with you another real life position in which the underlying stock is down over 45% over the past several years, I want to share with you one more position that really went against us in a bad way, and I'm going to give you a bonus tip after this trade. Here you see a trade we did on July 5th. We sold to open the MKC August 18th, $85 cash secure put options, or paid $1.20 per share for that option. If you notice here on the bottom right, the weekly chart of MKC when we entered this trade, it was right here at this green candlestick. Notice the MKC had recently made a higher high and it appeared to have made a higher low and found support right at this red 200 moving average on this weekly chart. Although there had been fairly high selling volume in MKC a week or so before that, that selling volume happened when it was at the high of the previous wave, so we expected there to be pretty decent volume. So overall, we liked where MKC was and it appeared to be another potential profitable trade for us. Although MKC did go up a little over 8% over the next several weeks, after that it began its decline and has now been down over 11% from that previous high. As a result, the $85 cash secure put option we had sold was in the money. So what can we do to fix this position? Before I share with you what we did to repair this position that gone against us in a pretty big way, let me share one more trade we did between when we entered it in July and today. Here you see that on August 18th, we bought to close the MKC August 18th $85 put options. We then sold to open the September 15th $85 put options. For that trade, we walked away with another $1.40 per share. Now, I decided to roll that cash secure put option out because as you see here on the charts, in the bottom left daily chart, MKC was right back at an area that should have served as support for it. It was right back at that red 200 moving average on this daily chart. And over on the weekly chart, it was just above the red 200 moving average. So because of that, I felt comfortable rolling this $85 cash secure put option out to September. Well, you know what's happened. Since that time, MKC has dropped and it's down over 5% in just a matter of a couple weeks. I knew that our September cash secure put option was in jeopardy being assigned to us, but in looking at my possibilities of what I could do to fix this trade, it didn't look like it was going to be an easy process of rolling the strike price down as we rolled it out, like we have the previous 3 tips that I share with you. So I decided that I was okay if MKC were assigned to us, so I just let the put option sit out there and wait to see what would happen. I was looking for an opportunity for MKC to come back up in price, which let me roll the strike price down as I rolled it out, but it just didn't happen. As a result, and as you can see here, that $85 cash secure put option was assigned. So we bought 200 shares of MKC at $85 per share. My plan was that if this happened, I was going to turn it into a covered call position.